please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, there goes the bell, and it is a 0.4% gain, so 11,400 scaled and stays there for the first few seconds at least. And the Sensex as well, up 205 as I speak. The Nifty Bank up 0.5%, actually the leading sector, with about 130 points. Yes, you're hearing the drum beats, and that's because it's a fresh all-time high for the Nifty, up 0.5%. I would assume it's a fresh all-time high for the Sensex as well. I don't remember the number, but it's 37,800 approaching. Yes, it is all-time high for both Sensex and Nifty. So big morning for the markets in a record sense. The midcaps as well are up about over 0.5%. But let me read out the winners first, the banks first. SBI, ICICI are in the top 5. And then come Vedanta, Lupin and Dr. Reddy's. So pharma and banks are taking the lead. But TCS as well is not far behind. That's the 7th largest stock. Okay, Axis is joining the pack of big gainers among the banking stocks and big gainers among the Nifty as well. Then you have Bharti Airtel, M&M, Hindalco, Adani Ports, Sun Pharma, Titan. Titan, after the con call, is up about 0.75. NTPC and the like, all of them up between 0.5% and 1%. A very short list of red stocks, and even they by small change actually. HUL down about 0.3%, Indiabulls down about 0.3% after a heady rally last week, especially on Friday. Bajaj Finserv, it's been a heady rally whichever day you pick, and that's down about 25 or 0.2% thereabouts. And Wipro, after that deal got scratched, it's about 0.16 down. Not much, actually, no losers at all. All winners as far as the Nifty is concerned.
Well, the midcaps are not to be left behind. This morning, Lata, we've got a 100-point gain on the midcap index. The market breadth is looking very strong as the day opens out. I'll quickly come to some of the movers and shakers. So result reactions that are going down well include Gujarat, Alkali, Waterbase, which is up on 5% circuit. There's a rub-off on Avanti Feeds, as Mr. Tulsian was telling us, 4% up on that stock as well. Indian Hume Pipes got an order, big enough order, 3% up there. Some of the textile stocks like Arvind and Raymond are worth keeping on your radar because of what our sister channel Awaz is reporting. Potential package coming the sector's way. There is some positivity around IDFC. Remember, there's talk that IDFC could sell its mutual fund business to Avendus. So there's generally a lot of excitement around asset managers. You'll see that on Reliance Nippon as well, which is up about 3%. So these are some of the key names. On the downside, negative result reactions, Suzlon, Lotus Labs, Den Networks. Divi's, interestingly, is correcting despite such huge margin expansion. Maybe you can argue stock's already done up so much. That's down. Even SAIL, for that matter. Great numbers, but is it already in the price? Maybe that's the question. So, Anuj, how do you look at things as of now?
I think it's a good opening. We have opened higher than the last. And I think the Bank Nifty didn't give you the dip, but perhaps give you a bit of a flat start. And from there, it's moved on because everything is participating now. So 200 points higher on that. Advanced decline is looking good. So far, so good. Let's see how things move from here. Ashwani, your thoughts? It's again a big opening for the market.
Well, I had positions from Friday and I'm giving it to people, who would like to buy today. I'm interested in buying the dip. Market can go wherever it likes. And, this HDFC listing may have something to do with this exuberance. So I'll wait for my dip.
Okay. Sudarshan, any thoughts on a Nifty trade itself now? A positional trade, and any stocks?
Yes, for the Nifty, if you have positions from Friday, as even I have, then wait patiently for a 30-point dip. It will come. You have to be patient. If you don't have any positions, then you must buy the Nifty and the Nifty Bank at current levels, because this is a long-only market. You must be in this trade. There are two stocks that now come up as markets open. One is Yes Bank and the other is Adani Ports, and both for buying.
Okay, you said it. I mean, that 30-point dip is not coming. A 30-point up move is coming, actually, whichever index you touch. Look at the Nifty Bank up 0.6 now. Sensex is up 230. That's again 0.6 up. So 2/3 of a percentage point jump in these two big indices, and the mid-caps as well up 0.5%, 0.52. Mitesh, any new ideas?
Yeah, Lata, I think, we've been recommending pharma since Thursday, Friday. Only thing is that I've added a new stock. Sudarshan also mentioned the stock in the morning. Aurobindo Pharma, I think, has gone past that 625, 627 zones. So keep the stock below 625, look for a 650 kind of a target. I also like Arvind, which is open with a gap up. I think the yesterday's high of 420 should be your stop loss now, and trade on the upside with a target of around 450. And in fact, I have one short sell as well. Britannia, I think, on the intraday chart is looking very stretched and showing signs of tiredness and profit booking. So that can be a short sell with about 80 point kind of a stop loss from here, and look for a 250 point, 200 to about 250 point kind of a decline.
Okay, the stock of the moment for me now is Titan. Just see the intraday chart of Titan right now. It had a bit of a downtick at open, but now moving on, and about 1.5% higher is what you have on Titan. About 933 is what you have. So, Ashwini, you've spoken about the fact that you would wait for a dip to buy, but any big call for the day?
Big call is probably NIT Tech, because techs had several down days and now they are beginning to move higher. Banks have probably done their bit for the last 2 or 3 days. So maybe some money may move into NIT Tech, but overall corporate lenders continue to lead the market.
Okay. Thank you very much, gentlemen, for joining us and taking us through the early morning rates. We are going to come back to you repeatedly. Today looks like a very big day. 230 up on the Sensex, 178, 180 up on the Nifty Bank. It's now racing ahead, the Nifty Bank. Then, SBI, ICICI, Axis, the corporate lenders who are, and maybe BOB as well, who are normally picked out as the guys who have been able to overcome their problems. You think there's more to go here? You think the tide is clearly turned?
I don't know about clearly, but from a near-term point of view, I think they have some momentum. I mean, you saw the reaction after the ICICI profit loss announcement, and the stock bounced back very smartly. Axis Bank hasn't gone down after the results. And I think there's a general expectation that SBI, after looking at BOB numbers, will be better this time round. SBI is such a swing factor in the Nifty results for 2019, and that such a lot hinges on the composite Nifty profit because of SBI. I think that might be a mood changer for the market, depending on which way it turns out this quarter. So keeping fingers crossed on State Bank. You know my views on public sector banks. So I'm not in the camp which believes that a new dawn has arrived and there is a great long-term bull story in public sector banking. Perhaps not, but in the near term, will they bounce on expectations that the worst has been disclosed already? And at least for 2-3 quarters, the numbers might be on the mend. That's entirely possible.
Well, at least they've given us some more legs to speak of as far as the market rally goes, Udyan. Speaking of which, your thoughts maybe on a stock like ITC, which finally seems to have broken out after a while. Numbers seem to be okay. But any thoughts on the other pockets of the market when we're talking about broadening of the leadership in this leg of the rally?
Well, ITC has played catch-up, and it had to, given that it was trading at very low valuations compared to the rest of the sector. The trigger was that after 3 quarters, you saw some volume growth out here. Small volume growth, but it did take more than 9 months for ITC to come out with some volume growth in tobacco. I think ITC is a valuation catch-up story more than any kind of a secular consumption growth story. If you want to play consumers, I mean, there are many stocks, some of which you mentioned this morning as well. I know valuations might be elevated in some of them, but if you look at numbers even this quarter in names like Bata, Havers, Titan, etc., there are many good consumer or consumption themed stories which are playing out between 40 and 50 PE. So ITC will rally a little bit more, maybe get close to or bridge the valuation gap between some of the expensive consumer plays and itself, and then I think it will stop. Because tobacco per se, which is where ITC's valuation comes from, is not as clean a consumption story as some of the others that you can find. So essentially what is going on here is basically low valuations playing catch up. Once that is done, I think you're better off shifting out of ITC into some of the other even more expensive consumption plays.
Okay. Well, those are visuals we are getting from the HDFC AMC listing. Then you can't see them, but all the biggies from HDFC are there. There's Deepak Parekh, Renu Karnad. Uday Kotak is there as the lead manager of the company. So that's all of them. Udayan, actually on that point, I wanted to ask you about the Uday Kotak preference share issue. I mean, it was a master stroke in terms of, managing to reach the given target of 20%. But will it wash with the Reserve Bank?
We'll have to see, but it's a very, as you say, it's a very, very smart move, and trust Uday Kotak to do something like that. I mean, the headlines read one way, but when you looked at the fine print, it read quite another way. So I'm also marveling at how he's done it. I don't know, Uday Kotak is somebody who the Reserve Bank, I suspect, likes a bit because, he's sort of one of the later bank licenses which have never put a foot wrong. And in a sense, he exemplifies the kind of person RBI wants to give out banking licenses to. So I think because he's such a poster boy of the new age banking license, I don't know, I mean, whether the Reserve Bank will let it pass or not. But it's an interesting maneuver for sure, the way he's choosing to bring down his stake in the bank.
Absolutely. Then someday I'll want to speak more about that. It's just that does the Reserve Bank give him, let him, circumvent the rules, so to speak, because he has done such a good job, as you say, the poster boy of the new bank licenses? Or does it make rules believing that everyone will not be Uday Kotak and rules have to be made for every banker? Don't you think?
In theory, yes, but we know that people have preferences. Even the Reserve Bank is made of human beings, so we have our likes and dislikes. So we'll leave it at that.
Yeah, I know. They could tweak the rules as well to say that when you pass the fit and proper test by such a large margin, then yes, ownership and control will be kept separate and shareholding brought down by preference shares will be allowed. Clearly, fit and proper is what RBI will go by, so they can as well accommodate this. Let's wait and see. It's a very, very interesting dilemma for the central bank. Thank you very much, Udayan, for joining us with your thoughts this morning. Well, with that, let's invite our market master for the morning. S. Krishna Kumar, CIO Equity of Sundaram Mutual Fund, joins us now. Good morning, Krishna, and I have to congratulate you. You got it right. When we last spoke, you said that you actually expect the mid-caps to catch up. You thought they were bottoming out, and almost as if they heard you, and from that day, the market breadth has been widening. Now, do you feel more encouraged to pick mid-caps rather than large caps?
See, I think, there was a big valuation, derating that happened in the mid and small caps, and we were seeing a clear reason and a case for people to incrementally, start getting more positive on the mid and small cap story. And, the results that have been coming through, as you have seen in the last 30 days, we have seen a fairly healthy improvement all round. It's just not only large caps, but it's also the good mid and small caps doing well. So there's a wholesome recovery in earnings that we are seeing across the board. And so to the extent our belief was that there will be a catch-up in the mid and small cap, and the broad market width would expand as people start looking, outside the top 10, 15 stocks which are holding up the Nifty. So I think we continue to believe that the market breadth will widen in the next, quarter. We believe that even calendar is particularly light, at this point in time for the next couple of months. So we don't expect any significant negative news flow that could come into the markets also to derail sentiments. So we would believe that investors should, balance their investments into mid and small caps too.
Okay, Krishna, good morning. So, of course, mid-caps have played a catch-up, but there's still a lot to be done. If you're looking at only this year, of course, if you're comparing data from last year, perhaps you could argue that they have both done in line. So, at index, though you are a bit of a mid-cap mogul, but at index level, you think we run the risk of a bit of an over-exuberance? I mean, over the last 3 or 4 days or the last 3 or 4 weeks, it's been a one-way journey for the Nifty.
Yeah. So, a few times in the markets, it might be not good to just look at a particular index, basically, particularly when the trade is very narrow. So what we do expect into the next 6 months is that the index broadly would be more range bound, give it plus or minus 300 points. But you would find that there would be far more sector rotation that would happen, into stocks that have been languishing, compared to the movers of the index. So we do see that money will rotate into other, banks and other sectors which probably do offer good value. So that's the way we would look at it, and that's why we believe the market breadth would also widen at this point in time.
Okay. Just want to point out some stocks because in the mid-cap and the small-cap side of the market, there's a lot of exuberance today. Just some examples. Trident, for instance, now is up 8-9% expectations of this textile package. Venky's is, ever since it moved out of ASM, it's not stopped. 6-7% up on Venky's. By the way, I just want to reiterate that some stocks are still in ASM, but yet they're moving higher. Apex Frozen, Rain Industries, these are still locked at 5% upper circuit. Maybe there's some kind of a hope trade playing out because this ASM list is revised once every 2 months. And there are exclusions and inclusions. It's an ongoing process. So anyway, there's plenty of excitement around. Purvankara, by the way, they've got some good bookings for one of their Goa properties. So lots of interest in the mid-cap side of the market. Krishna, morning. So speaking of mid-cap themes, I know it's very bottom-up. But as themes, what would your top plays be right now? For instance, would it be auto ancillary? And some of these shrimp and, shrimp feed companies, for instance, they've kind of been multi-baggers in the past, but I don't know if there's any sense in chasing them now.
See, we don't understand that space very well, so I would reserve my comments there. But however, broadly from what we understand, I think there is a fair bit of demand pull on the shrimp side. But at the same time, the inputs have been moving up pretty sharply. So the spreads are definitely far lower than where they used to be over the last 6 months. So that's the limited view there. But however, I think if you look at areas where we see a lot of value, if you look at the infrastructure, engineering, construction companies, you'll find that the order books are moved like 3x in the last 1.5 years. And they're sitting at a comfortable 4x order book to bill position, and margins have been pretty healthy in terms of what they've been reporting. And the balance sheets have been a lot more favorable in terms of leverage at this point in time. And we do believe that execution is picking up pace. However, I think the markets have been, pretty unkind to that space, given that there was certain, issues in terms of interest rates moving up and a little bit on the elections that are kind of expected to throw up some kind of surprises. So I think that's a space where valuations have corrected significantly. A lot of investors have moved out, and it's also a sector which has been impacted by the ASM and also the SEBI rationalization in terms of market caps. So I find that as the dust settles down, there is going to be fairly good value in that space that one can look at.
Mm-hmm. Across your holdings, Krishna, you have quite a few NBFCs. Of course, you have the mighty Bajaj Finance FinServ in several funds. You also have, I think, MMFSL. You have Equitas. You have quite a few. But how about NBFCs? Would you keep the faith if we are in a rising interest rate syndrome? Would you want something else to be the top sector?
Yeah, see, there are few segments like home mortgages where there could be some pressure on spreads, basically. But other than that, broadly, our belief continues to be that India is completely underpenetrated in terms of financing, and banks cannot do much more than what they have been doing, particularly with all the restrictions on their PSU space at this point in time. So it is these NBFCs who will deepen and widen the market and access and offer specific products to to customers of different kinds, be it a vehicle, a fleet owner, or a consumer, etc. I think clearly these have competitive advantages which are there to stay for the next 5 to 10 years. Okay. So we are not looking to change our position significantly on the NBFCs. We would probably rejig a little bit, if at all, on the home finance mortgage business.
Okay. By the way, SBI is making highs of the day. Krishna, your thoughts on PSU banks? Because we've seen a fair bit of rally, especially in SBI, but others have also seen decent rally from the lows.
Yeah. I think it's a catch-up trade. Valuations have been very low. In terms of if you look at the kind of the banking infrastructure that they have and the branches and the kind of liability franchise they have built, I think PSU banks are quite cheap. But near term, they have been impacted by the corporate loan book and the stress therein, which justifies the current situation. So, in a sense, they are a very long-term trade. I think there are more reforms on the PSU space that are expected in the next term of the government, in terms of even mergers of banks into probably half a dozen PSU banks, which are large giants in the country. Up until then, till such consolidation happens and we know which banks goes where and what kind of capital these guys have after all the provisioning, we would rather wait and look at this as more a trade at this point in time rather than a structural change in terms of the PSU banks. We would rather prefer to play the recovery story through other private sector corporate banks, be it the large ones or the small private ones who have a significant corporate exposure. I think the PSU banks will have to wait a little bit more to gain more clarity. However, the broader interest would be with the big ones like the names you mentioned, where people, if at all, they would like to participate and be ahead of the curve. Those are the big couple of banks which one would like to buy.
Okay, we'll have to leave it at that, Krishna. Lots of results pouring in, so we have managements with us. Thank you very much for joining us. KEC International has been waiting by, posted an inline quarter, margin strong, but the T&D business fell a bit. Rajiv Agarwal, CFO of KEC, joins us. Good morning, Rajiv. What about the T&D business? Was that a one-quarter blip, or will you be able to do better?
No, I think it was a one-quarter blip. Basically, what had happened that most of the orders in T&D business we had collected in the Q4 of the last year. So it takes some time before the sites are ready, before we can book our revenues. There was also a few states went into election in the Q1 and early onset of monsoon. These are a couple of reasons which have actually impacted the revenue in the T&D business in Q1. But with the kind of a order book that we have, we are quite confident that we will grow very well as per our guidance this year.
Okay, so on the T&D side, where this time around the revenue was down a little bit, what is the guidance you can give us for the next quarters?
See, T&D business should be back on track from Q2 onwards. Although in Q2, because of the monsoon season, again we can see some of the revenues may not really jump up, but from Q3, Q4 onward, the revenue will grow, and for the year as a whole, the guidance that we have given to the market of about 15% growth this year, that we are on track.
This is 15% only for T&D or overall? Because you have a fairly decent jump in your order book, 18,200 crore.
So 15%, Lata, is for the overall. So okay. Revenue from the T&D business will definitely will grow with the we have a huge order book of 18,200 crore at the moment. So there is no doubt in our mind that the revenue from the T&D business will not grow.
Okay, and finally, your working capital days have increased to 125 from 93. Would that be a worry? Will you be able to maintain EBITDA margins? Will something come in the way?
Not really. In fact, what we have mentioned, in the investor presentation is that during the quarter there has been some structural changes in the working capital that has happened. So if you look at acceptances and the trade payables and the borrowings all put together, our numbers have grown by about 600 odd crore because our acceptances and the trade payables have come down significantly during the quarter. Because the buyer's credit have not been allowed to be rolled over. RBI has put a restriction on the buyer's credit availment, and rollover also have been stopped. So that has led to some pressure on some of the suppliers. So suppliers have been paid off during the quarter to the extent of almost 900 crore. And further, because of the volatility in the commodity prices, and particularly with the Tuticorin plant of Sterlite, copper production has been stopped. So there has been a shortage of copper and also some of the steel product. So we have done a little bit of more of stocking as a safety stock during the quarter. So because of that, our inventories have gone up, and also some of the advances to the suppliers have gone up, just to ensure that we are getting a continuous flow of raw materials.
All right, we'll have to leave it at that. Thank you very much, Rajiv, for joining us with details of the KEC numbers. And we have to get back to Titan. Somebody is checking his time on the mobile. Mr. Subramaniam, people are checking time on Titan watches, actually. Big time. That's a huge improvement, both in terms of revenues and in terms of margins, especially 19% margins is some multi-quarter high, isn't it? How much of, what went right in watches?
Well, watches has been having an excellent run for the last year plus. Ever since we started the recraft strategy, it's about getting the brand right, the products right. Of course, the major improvement on cost factor. We ran cost programs for the last 2 years. We had our VRS 2 years back. So I think a lot of work has happened on that. But importantly, I think getting the brand back to its original sheen, investing in new products and so on and so forth has been the focus for the watch division for the last 2 years. And I think it's starting to show results. So good market share gains that we have seen. There has been some in the current quarter, quarter one, for example, there was also some higher primary sales in anticipation of the activation which started at the end of the month. So to that extent, I think that it would not be an absolute representation of performance for the quarter. So either 18.8% or 19% is, I think, a little high from that perspective. But having said that, I think we seem to be on a good wicket, looking at good margins for the year as a whole. Growth has been very, very encouraging. That's the most important part. At a UCP level, I think our growth is about 20% year on year, which is extremely encouraging.
Okay.
So we're looking forward to a good year, yeah.
Okay, Mr. Subramanian, good morning. I wanted to talk about the jewelry business because Gulnaz has been such a big success, and there's one thought process which is gaining traction, that ever since that Nirav Modi's scandal has happened, the high-end buyers are looking at a reliable brand, and perhaps Titan could be filling in that void. Is that a big market that you're looking at going forward?
Absolutely. I think our focus areas have been high-value studded jewelry where Gulnaz fits in, and of course the wedding jewelry segment. And these are two major areas of thrust, other than of course the network expansion, Golden Harvest scheme, now the new Golden Exchange program, which has been doing very well. So the focus from a product perspective has been on these two areas, and it's nice to see that the response from the consumers have been very, very positive. So Gulnaz has been doing quite well. We had a fantastic July. I think we mentioned why the overall growth for quarter one was muted, and that's because of the high base that we had. But July seems to be back on track, and so good growth. Hopefully for the next 3 quarters we should start seeing some 25% sort of growth.
So 25% growth in the jewelry business. You're sticking to that guidance target, sir. A word on your advertising costs, which have gone up incrementally in the first quarter. So as a percentage of sales, where are you looking at maintaining ad costs, and what impact would that have on margins?
two divisions where we are going to be investing more in advertising, which one is, of course, the watch business. We've seen a significant growth, and we are seeing the impact of that as well in our top line. The other one is going to be the eyewear business. This year we've said that we want a good top line growth as far as eyewear is concerned. We are not going to be focusing on margins overall, and the idea is that we invest in the brand and get it stronger and get that top line growing. So 16% growth in the quarter will mean that we are going to be investing more and more in advertising. So I think it's good to build a brand when you can. As far as jewelry is concerned, I don't think there'll be any disproportionate investment in advertising. So it's going to be the way it has been earlier, because things are going well. We don't have an issue there. So when things are going well with the jewelry division, it makes sense to invest in the other two as well.
Okay, what is the market? I mean, what is your split of studded jewelry and non-studded jewelry in that segment?
Last quarter it was about 25%, which typically will be low in a quarter like quarter one, where you have, it's a plain gold quarter in a way, because the activation or the studded promotion happens in quarter two, which is just now. Therefore, this quarter you would see a disproportionately high share of studded jewelry. But having said that, 25% for the quarter one was marginally higher than what it was in the same period last year. I think it was 24 last year. So we have improved on that. Yeah.
The reason why I was asking is I would assume studded is more margins, and therefore will you say, yes. I mean, you have said that even for this quarter, year on year, there is more studded share. So should we see an improvement in margins in jewelry segment because you're doing more studded?
Yes, I would think so, because the more the higher the studded ratio, the higher the margin. Having said that, we've also stated that we want to look at overall growth, and that includes the wedding jewelry segment, which predominantly is plain gold jewelry. It may have higher making charges, but it still is plain gold jewelry, therefore lower margin. And therefore, we don't really have, 3 years back, 4 years back, we said we need to get something like a 40% share of studded for the year. I don't think we are looking at that, because we want to grow in all sectors. And I think overall, when you grow like that, the operating leverage should kick in anyway. So overall, the EBIT margin should be better. And we've at 11% plus now. I think that's clearly happening. So I don't think it will be that. I mean, while we are focused on ensuring that studded jewelry segment does grow, it would not be at the cost of plain gold jewelry also.
Okay. By the way, just look at that price on your screen. This is just before the actual listing. It's blown past expectations. It's blown past the so-called grey market premium. We're looking at a 1700 plus on HDFC, AMC, 57% above the issue price of 1100. Let's see, a couple of minutes from now, we'll actually have the real traded rates as well. Mr. Subramaniam, those are the visuals coming in, so we'll be moving to that in just the next couple of minutes. Mr. Subramaniam, just a final question then. Also, again, on the jewelry segment, you also have this gold return scheme. And I think it's a zero-cost scheme of some sort. So would that be a bit of a margin headwind? And overall for the company, I mean, where should we expect margins to stabilize this year?
The gold exchange program, as we call it, has been one of the large drivers over the last year and a half as far as top line is concerned. We've made the scheme very attractive. Two reasons. One is, of course, we attract consumers, new consumers into our brand. And the other, of course, is it also helps in not importing that much gold. This is one of our views of also ensuring that, in the event that there were to be curbs later, we are de-risked to the extent possible. So today, more than 40% of the gold that we procure is coming in from exchanges, which is a very, very good thing. I don't think it's margin dilutive. If anything, it's neutral and at times actually margin accretive as well, marginally. So we don't have an issue with that. It's a great customer acquisition program, and I think we'll continue to promote this.
All right. Mr. Subramanian, we'll have to leave it at that, not because we've run out of questions, but because we've run out of time. We have to take a mandatory break before 10 a.m. Thank you very much, sir, for joining us. Thereafter, we are going to be back with our technical experts. We will have the IPO listing. We'll also have a very big guest, Mr. Chandrasekhar Ghosh, Managing Director and CEO of Bandhan Bank.